Hey, welcome to Satisfy YouTube channel. In my channel, we talk about personal finance, money, and today we're going to answer some of the questions that you have sent me on Instagram and my YouTube channel. So I finally crossed more than 500 subscribers, right? We're on the road to our first YouTube play button. So how many YouTube subscribers do I need to get my first play button?
You need 100,000 subscribers.
Well, okay, never mind. And also my blog has crossed over 500,000 views. Well, in the world of TikTok and YouTube videos that cross millions of views, my humble blog has received 500,000 views and I'm actually quite happy about it. Alright, let's move on to the first question. So WSN asks, can you do a video while you're drunk? Well, let's find out. Right, so Snakula asks, what's the basic money management knowledge young adults should know or do? I think that I have 4 philosophies that young people should follow, or at least I do, even though I'm not that young anymore. I think you should know how to save properly, you should know how to spend properly, and then you should insure and invest properly. I think young people should save aggressively and put aside as much of their income as possible, and when they do need to spend, they do need to know how to use a credit card properly and maximize their rewards from any of their spending. They need to know the importance of insurance and buy the proper kinds and not get ripped off by insurance agents who are just trying to meet their production targets or earn high commissions. And then they need to put the rest into investments for the long-term horizon. So these are 4 basic things that I think each young working adult needs to know, and each is of course a whole realm on its own. You can read more about it on my website. The next question is by Wei Ping, who says, besides monthly salary, how do one expand on personal financial portfolio? Right, so aside from your own monthly salary, I'm a firm believer that you should do your side hustles. So if you have tuition assignments or you have anything that can generate you an income during your spare time, I think you should try to do it. Not only does it give you an income, it also gives you some options if your main career path is not doing well. I speak from experience because last time I was doing insurance and it was not doing that well. And then I had tuition as a side hustle, and then later that became my main job. And then while doing that as a main job, I actually set up satisfy.com, which was my side hustle, and now it's actually supplementing my income quite a fair bit. And of course, now I have the YouTube channel, which I hope will also do the same thing and give me more income sources and something to fall back on if things go bad at my main job. With the added income, you can also, of course, save more and invest more, and then you can retire earlier. Of course, provided you have the time and energy to do so outside of your main job. Okay, you don't have to work all your weekends away at a side job. I think this depends on your personal comfort, right? But I think devoting a few hours each week to building a side income is actually one of the best things that anyone can do for your own finances. Right, the next question is by Wang He Chang. I'm not sure whether I'm getting the name correct. Okay, but Wang He Chang asks, what do you think about Roboadvisers and which is the best in your opinion? Oh, I love Roboadvisers. In fact, I use a few myself and I think they represent about half of my entire portfolio. I'm partial towards Roboadvisers that focus on low cost ETFs because they cut costs, and I'm not that much a believer in actively managed funds because I think that the high expense ratios into your returns over the long run, and most of them don't actually outperform the benchmark or how the market is moving anyway. So I'd rather just buy passively managed funds. And Roboadvisers actually do that, and they offer some conveniences like automatic rebalancing and automatic dividend reinvestment, which can be a chore if you are investing on your own. And they're not that much more expensive than doing it yourself anyway. So personally, I have quite a bulk of my portfolio in Roboadvisers. And for Roboadvisers that focus on lower cost funds, I think Stashaway and Syfe are good choices. You can use my referral links. Of course, they earn me some referral fees, and it'll keep me doing more videos and answering your questions. Tattoo85 asked, just started contributing to SRS. What would you suggest to invest? I also started to contribute to my SRS last year, so I've been actively looking out for investment opportunities, and I think Roboadvisers is a good answer to that. You can use Stashaway to invest your SRS funds. Syfe at the moment does not accept SRS, but they have been working on it, and I hope they do eventually. You can also use your SRS to invest in stocks, but unfortunately this is restricted to the Singapore exchange, so probably something like the STI if you want diversification from a small capital outlay, or you could just buy the bank stocks yourself since the STI is almost 50% dominated by the banks anyway. But if you want something fast free, I think Roboadvisers will be a good start, especially if you just started like me and your SRS is not a lot. I think it's quite cumbersome to go and invest in stocks and shares yourself. So I just dump everything in the Roboadviser. What about Matt asks, at what point should I cancel the credit cards that I no longer have any use for? Well, if you have no longer any use for the credit card, then you can cancel it anytime you want. Alright, just make sure that you have redeemed all your points, gotten all the cashback or any other rewards that you have in the card, and then just cancel it. Now, do take note when you cancel all your credit cards with a bank, your credit limit actually decreases, which has a slight impact to your credit report, but nothing to worry about. My credit report fluctuates wildly between D and A, and it has never really affected my applications for credit cards or loans. So I think you should cancel as long as you don't have any use for the credit cards. And on the plus side, right, after 12 months, most banks will consider you a new customer again, and then you can sign up for all the great credit card goodies for new customers. So King Hu actually asked, do you manage your investments actively or passively? And my answer to that is both. I actually do a mixture of active and passive investing. So as I mentioned earlier, I actually put a bulk of my financial portfolio in Roboadvisers, and I consider that to be passive investment. So every month, I just contribute a fixed amount to those Roboadvisers, and I just keep them there for the long term. I also dollar cost average into some ETFs on a monthly basis, so that is relatively passive, but there's also some active work where I actually pick the ETFs that I feel will do well over a certain time horizon. And there are times where I feel that the stock market is on discount and I actually go in to buy a few more of these ETFs. So that is fairly active, but again, I don't really spend a lot of time actively monitoring the markets, and I usually just put as much money as I can each month into it to invest for the long term. Alright, ZSXANW asked what to look out for when buying a condo. Well, of course, there are the usual things that you look out for, meaning the location, whether the sun comes in during the evenings, things like that. So obviously you want to check whether the location is near your workplace or places that you frequent, those sort of things. So the research I did before I bought this place involved viewing different units within the same development, and also taking a bus to work to time how long it takes me to get to work in a realistic manner. And also coming at various points of the day to view the unit to make sure that it looks okay at night and it looks okay in the daytime. If you like the location, you like the unit, you think the neighborhood is great, then the most important thing is the budget and whether you can afford it and comfortably afford it. So I think the most important thing is actually your budget, because if you find a perfect place but you are actually overburdening yourself by paying the monthly mortgage, then there's really no point. Another thing you can take note of is also the list of transactions for the development on URA's website. So you can see all the past transactions, and that can help you get a sense of what is the market rate for that particular development. Another question on property raised by DH on my previous video was, hi Seth, maybe you can share how singles can go around these constraints, referring to the constraints of PLH. But my response to that is that marriages of convenience are illegal in Singapore, so there's really not many ways that singles can get around PLH rules. My advice would be that we can continue to keep up pressure on the authorities by signing petitions and maybe writing to our MPs, right, to let them know that singles also need housing, and keep up the pressure so that they accommodate us in their plans for housing. Of course, we can just suck it up and buy one of the many other resale flats in prime areas, or save up money and buy private property. That is also one option. I mean, singles like us, we don't have much to spend on, right? No kids, no partner, no dates to go on, drink at home alone, filming YouTube videos.
They ask you how you are, you just have to say that you're fine when you're not really fine.
Can save a lot for private property. Alright, Mr. Boo HR asked, what's the best way, guaranteed, to grow your cash? And my response to that is that the best way to grow your cash is to invest over a long time period. And you may say, hey, there's no guarantee of returns. But my response again would be, if you do not invest, you are guaranteed to make a loss due to inflation over the years. When you put money in the bank, your capital might be super safe, but you are guaranteed losses because of inflation. Your 50,000 sitting in the bank now will be worth a lot less in 10, 20, 30 years. So that's one guaranteed way of making a loss. And when financial instruments give you guaranteed returns, they are usually very low, and it also means that you're guaranteed to lose out due to inflation. My view is that by being so risk averse, you are guaranteed to make a loss in the long run and give up a lot of potential return because you're too afraid to face some short-term volatility. Now think about it, all these companies in the world, they are busy building products and selling it to the masses and profiting from them. And you're sitting on the sidelines, afraid to invest money because you're afraid of making losses. All while these companies reap in all the returns and profits over the years. Your money is just going to stagnate and lose out all these potential returns you have gotten in the long run. Again, if you don't invest in 20, 30, 40 years time, your opportunity cost is staggering. That is a guaranteed loss in my opinion. Opportunity cost is also cost. The last question I'm going to cover today is an interesting one. It's by Primo Gravity and it says, what financial red flags or deal breaker do you look for in a potential partner? And I feel that the number one red flag that I'll look out for in a potential partner is whether they are prudent in their spending, right? If they are very extravagant in their spending or they don't think twice when making big expenses, that's something that would raise alarms, personally speaking. A lack of prudence in money management, it goes at odds to how I am as a person. So I think there will be a lot of friction there. And it might lead to future squabbles or disagreements. So I think that's a major red flag I look out for. So I have 4 philosophies: save wisely, spend wisely, insure wisely, and invest wisely. And I think that if any of these 4 are flouted or purposefully flouted, I will feel that that is a financial red flag. Now, obviously, some people are not as uptight about money as I am, but again, that is my personal red flag. So your mileage may vary. You might think that that's all okay, but again, this is my red flag. I'm not saying that it's bad to be less uptight about money. Okay, some people might feel that my uptightness about money is a big turn-off, and that's their freedom to think. Well, I hope you had a great time watching this video, just like I had answering your questions. It was a fun thing to do, and I hope that you keep the questions coming in. And I will have another video where I answer all your questions plus all the unanswered questions that I had this time round. Alright, in the meantime, give me a like, subscribe, okay, and make sure you join my Telegram group. I think there are a lot of content that if you just subscribe to the YouTube, you will not receive. Okay, and in the meantime, right, drink responsibly, and I'll see you next time. I'm not alcoholic, right? There's a lot of Coke in here.